Bear with me 1 minute, I'm just about to start. Thank you to all of you joining me on YouTube and through the Zoom. Let's get going. So great day trading today. So I'm going to walk you through what I saw in the markets today. And so I'm just going to keep this presentation nice and short, give you some live examples of what I've done, show you a few screenshots of trades I've done. Got any questions, type them in. If you want to ask me directly using your microphone, that's fine. Just let me know. I will unmute you. In the meantime, let's get going. So trading setups and timing. So I just go through a little bit about what I've done today. I took gold today, and in the alert room I've got, so we've got a live trading room. Once the live trading room closes, the alert room kicks in. So here at 14:50 UK time, I went long gold today at 1985, and I was looking for 2014 dollars to get out. So it's a $29 move, and I succeeded in doing that. Let's have a quick look at. We'll look at that in a minute. In the meantime, I've just got a few other gold trades here, and I'll show you. I don't always trade gold. It just happens to be when gold is really trending well, then I would trade it. I normally trade the Dow every day. So, but I'll talk about gold for now, and then I'll talk a bit about gold. Dow in a moment. So yeah, these are some trades going back, because I'm just buying support here at 1950 on gold, 600 quid profit on that one as it runs. Over £1,000 profit on that one on the 19th of April, 550 as I did the screenshot in this one, and so on. You can get an idea of what I'm doing, and how that's a quick example of how I line my charts up on that one. Let's go and find the charts. So let's go and find gold. So the reason why I have been so bullish on the gold, this is a 15-minute chart chopped up for individual days, for individual UK 24 hours. On a 15-minute chart with a 20-day average running through it, you can see it's been pretty flat overall ever since we climbed up here. We've been going, it's been consolidating. So the trick is, you've got to know and have the experience to know how to manage a consolidation pattern. And so here is my daily chart in the gold. This is why I was so bullish on the gold. I've got a very, very specific way of measuring daily charts, which is shown here. And so you can see once we had a huge day on the 17th of March, ever since we climbed off of 1805, I think, well, 1803 here on the 8th or 9th of March. Yeah, live trading of the gold, yeah. So ever since we climbed up here, we've had this huge consolidation. So with a big day on the 17th of March, we pulled back inside of that range on the following week, on the Tuesday. And then you can see here, we've been very flat, pretty flat since the 10th of April. We had one squirt higher and then fell right the way back. It's a huge consolidation. And these can be very distracting if you don't know how to manage them. And you don't quite know what's going on, but so the trick with this is several fold. There are several sort of secrets, not secrets, several important factors, I should say, to managing any trade. This could be wheat, gold, oil, Dow, could be a stock, IBM, Nvidia, whatever. So it's focusing on this consolidation, focusing on what you think the potential is, knowing how to read the chart, but then just keep at it. You have to be very, very patient in these markets. So this is the best day in gold since the 4th of April. We had a huge day here on the 17th of March. Yeah. I'll unmute you in a minute. Let me just carry on and I'll unmute you in a minute. So you just keep taking the dips in a chart like this until they break up. So I'm looking for this next stop is potentially 2075. If we can hold that, get up there and hold up there, then 2200 is the next target. Right, let me just unmute everybody. Right, let me turn my, I've not got sound on, bear with me 1 second. Right, I've got sound on now. Right, Elaine, you are unmuted. So
yeah, I see this. So I'll let you finish, and after I will,
okay. Let me turn my, I've got not got sound. Right, hang on 1 second. Just got sort this volume out. Right, I've got sound on now. Sorry about that. I'm sorted now. Okay, so if we then scale down on these charts, let's go back to that 15-minute chart again. What you basically got is huge support down there, as it's pretty obvious to see, but you've got this breakout pattern, which actually kicks off in London, and then finally gets going, gets the volume. But look at the volume spike here. That's the key to this. Talk to you about a couple of other elements on this in a minute, but you can see the volume coming in. Even as we come into the US period, the volume increases. If you see that kind of level of volume, then that's where you need, with a big powerful bar, then you need to get into that and stay with it. Now, the system I use shows me, if you go back to where I quoted today in the alert room, I'm opening up this alert room to others. Right, okay, so here you are. So at 2:50 UK time, I said long gold in 1985. I did think there was a decent chance this may not work, only because we had, only because of that London move off of that earlier level, 1982. Quite often the US drag it back down to where London prices. Today they didn't. It just took off and ran. All right, I was going to talk to you. So the question is, okay, so yeah, we can see the chart, benefit of hindsight, we can see it breaking. So where do you get in? Well, that's where you need to be armed with a system that will allow you to pick your entry spots. If I go down to a 10-minute chart here, the main volume comes in on gold at 2 o'clock UK time. So if you identify the 2 o'clock, actually, yeah, there we go. The 2 o'clock range was there. That code, if you look left, that is in line with the previous day's support level. So I'll break up here. So there's the 2 o'clock range when all the volume comes in on the US market. We having had a big push up yesterday, this was a key level into the late period of the US. This is where the US market really shut shop. This is the Asian period, London, and New York. But what we've basically done is the same. We repeated that pattern over here, only this time around we've gone further. All right, so if you can pick these, if you've done the preparation, now I do the preparation for you in the alert room. If you do,
I have a question, Mike, if I spell well your name. I want to know, do you use leverage when you enter a position?
do I use leverage? Yes, I do. Yeah, I do trade the futures market. I've shown you screenshots of an IG
Because
trading account.
I'm quite beginner, so I don't really understand all of that, you know. That's why,
Right.
yeah.
Well, you can trade it in an ordinary retail account like IG Index or CMC.
Yeah, I have demo account, but right now I'm here, you know, to learn, you know, how you enter a position, how much leverage you use, maybe 1 to 10 or 1 to 20 or more, you know, and how, for example, you find your support resistance to enter a position.
Okay. Well, I mean, these are the kinds of questions that take a long time to get into. To answer. To cut a long story short, it's all down to the size of your account. If you've got no reason why you shouldn't trade a small account, but you just have to use no more than 2 to 3% of your account on any one trade. So various brokers offer you different levels of leverage. But I don't know what, you know what, I don't actually know what the exact leverage is on gold. I just sit there and pick the trades off. But you need to, risk management is obviously crucial to what you're doing, because there's, as I posted in the alert room, when I posted the actual trade alert, I said there was a risk this would fall back further before it broke. Luckily for me today, it worked. But I was not exposing my account more than 2% to the whole total size of my account on that trade.
Each time you enter a position, you will not risk more than 2%. That's common. Okay, so that I understand. But for me, one thing very important, it's how to enter. How to find your support resistance to put the stop loss and the take profit.
Yeah, well, I think this, to me, on this 15-minute chart, the support and resistance is pretty clear. If I just pull this back and we just look at the last 5 days trading, if I put a zone underneath all the key support there, but I mean, basically, what I'm not showing you here is my system of trading. I have a very specific system that I teach, which I'm going to invite you to join at the end of this. It's a very specific system here, but what I'm not doing today is teaching you the system. I'm just showing you the broad outline of what I do. And the broad outline of what I do is I look at every day's trading, a 15-minute chart. Well, this is one of the aspects of the system. I line the chart up, and I look for when the main US market opens, because what the US is where all the volume is. It's not Europe is doesn't provide the main volume, the main push. What would make life easier if I just showed you the system, but I'm not here to teach you that. Anyway, if you've already had, let's have a look at what happened prior to this gold breakout. We had a big, if I enlarge this, we had a big move up here, 10:30 UK London time. Let's look at the support and resistance for yesterday alone. There's yesterday's highs. There's yesterday's lows. Let's put a little pink zone on yesterday's highs as well. So already in London, in the London period, you could see London was buying that 1978, just as it did in the same London period on the previous day. And the most important aspect of it to me was what happened at the end of the day when the US market was, when the volume was tailing off and the US were packing up and closing their PCs down. That's what New York was looking at. in the end of Monday, when the UK was off and enjoying the weather and whatever. So these are, some primitive basic support and resistance in the gold, plus this breakout pattern with the support underneath and the trend line coming across the top, plus all the consolidation patterns in the daily, was all crying out for potential breakout. This was always going to, in my book, this was always going to break out. But the question is, when's it going to break out? Well, nobody knows. So all you do is you find the support in the daily chart, keep buying the lows in the daily chart, make sure you're very clear about what price constitutes a low in the daily chart, i.e. what is the key price levels in a daily chart, keep buying those levels, and then at some stage the probability is that it will move out and break out and give you a good move. So I'm trying to answer these questions very, very simply, but the real answer to these questions involves going into my system or giving you a lot more data, which I haven't got time for. Let's look at a 30-minute chart. 30-minute timeframes are good. You can see, gold was just flatlining. Every time gold dipped down here around the 1975, 1976, you had very handsome, very good breakouts. There's 1976, there's 75. And you've got a series in the since Monday, we got a series of higher lows. So there's a little clue that that you're going to move out, because you've got a series of higher highs and higher lows. So let's have a look. Let's look at the S&Ps, because I shorted the FTSE today. Let's look at the FTSE. So here's the FTSE in a 30-minute chart. Let's just take these lines off.
Michael, I have some question. At the end of this, do you have something to teach, or you're a teacher about trading? You have course to...
Yeah, what I'm going to do at the end of the session is to, I don't want to carry on talking too much longer anyway. I'm going to introduce, let's talk about it now. What I'm going to do is to swing this over. All of the things that I do in my trading and in my room and in my alerts I put in all come from this system that I teach. So if you want to get involved in the system I teach, this is what it covers. I'll give you this page as well. You got it?
That's why you talked about earlier when I asked about where you find your support resistance, how you enter your position, etc.
Yes, this is the way I plot support and resistance, the way I enter a trade and manage a trade is all within this program. And this program basically covers these strategies. So the strategies I use they're all based on basic support and resistance. They're based on the way I read the daily chart and interpret and predict the daily chart. They're looking at how I use gaps. In other words, the difference between the cash close on yesterday's market and the cash open on today's market. The open breakout, well, all the markets pretty much, the Dow, NASDAQ, FTSE, gold, they all have breakouts, open breakouts today. The big reload is a fancy way of saying, buying pullbacks. Intraday reversals, that's a completely different subject, but intraday reversals are very profitable. You normally get an intraday reversal at least once a week. An intraday reversal is where the market opens either very high or there's the norm, the price norm of any one week or any one period. If you open very high or you open very low in the first 30 minutes of trading, then you can normally trade it back to the mean, or if it's too high, or you can trade it back to the mean if it opens at an extreme low. So that's an intraday reversal very quickly. Got within the system.
I have a question about the strategy, because what I want is, a strategy that allow me to enter multiple time, in the market during one day. That's why I ask about leverage, because I want to enter maybe for some second or for some minutes and have to get out and to repeat that multiple time. Does your strategy allow to do that?
It allows you to look at the move in the first 30 to 60 minutes of a session, yes. If you're referring to very small moves, in the case of the Dow, sort of 20, 30, 25, 30 pips, no. I'm not interested in using a lot of leverage for very small moves.
Can you repeat? You say for you 20 pips is not is just few for you. What's a good range of pips?
Yeah, I think there's a difference between day trading and scalping. What I'm talking about is the difference between day trading and scalping. Scalping is to me, well, to most people, is where you are looking to gain 15, 20, 25 pips. To me, that's not my trading style. I'm looking for 50, 100 plus pips.
I understand, but if you use leverage, more you add pips, more you have a chance to the market to go to another side. That's why maybe it's just a question: is it better to make scalping, so to put leverage and to have less pips, so you have more chance to have a market on your side? Do you understand what I mean?
Yeah, I think it's down to personal trading styles. There are people out there who love to trade. You use a lot of leverage for very small moves. That's not what I'm doing. I use a small to medium sized leverage for bigger moves. Like I said, I'm not interested in 10, 20, 30 pips. For the Dow, I want a trade that's at least going to give me at least 50 pips minimum.
But if you say that, how long can you maintain a position? Maybe more than one day?
No, I do hold leverage trades overnight, but most of my trades are closed inside the first hour, sorry, or at least within the first inside of the cash session, before the markets close that day. I'll send you the recording, Patrick. That's fine.
Okay, that's mean for one day you can just take one position and make all your money with that.
Yes.
Okay.
But I've made money by shorting the FTSE today, and so I've sold the FTSE and bought the gold. That's an unusual day for me, because normally I normally just trade the Dow, but today I just concentrated on the gold and the FTSE, because they were the trades. The daily charts were the most attractive to me, and they looked as if they offered the best potential. But the key to this, the central focus to my trading and my success and my results, is a system that allows me to prepare my charts in a very simple way every day. And I look for certain triggers, back to what I've got in these in this chart here. I have certain strategies for a situation where the market gaps. So for example, if last night's Dow closed down there and we opened the next day up there, I'm going to look for that to at least peel part way back to where it closed. Vice versa, if we open up here, close up here on the previous day and open down here on the next day, I'm going to sell a move back towards that previous day's close. And these are all prescribed, these are all specific levels I look at within these core strategies.
Okay, and you are the creator of this course, or
yes,
you are...
I designed this system. I wrote the system in 2005, 2006. I have refined it in the early years, but I do very little refining, very few changes now, if at all, because the system works so well. I can tell if my system is going to work because if the gap in the Dow is greater than 70 pips, I use a gap strategy. If the gap is less than 70 pips, I use what's called an open range strategy. In other words, I measure the open range, and I've got specific triggers for the trade on that way. So that's strategy number one. That's strategy number two. I mentioned intraday reversals. That's strategy number three. There is, on days where you have key, we've got the US Federal Reserve announcing rate decision tomorrow. I have a strategy where I would trade a pullback once the data is out. So on a day like tomorrow, I won't trade until the interest rate announcement, and then I will mark off the trades, look at my system, and decide whether that's going to break up or break down. So that's strategy number four. Let me just go back and remind myself, have I missed anything? I don't think I have. Let's get back to this. Where are you? Oh, there you are. Yeah, the big reload, if you have a very rapid, very aggressive move up, quite often, now this doesn't always happen the same day, quite often the next day they will, or the next week, they'll drag it back to the breakup area. It's called a boomerang setup. So I wait for that to, if it's a very aggressive algorithmic based trade, I don't chase markets. That's one of my rules. I do not chase the markets. I wait until it returns back to the breakout area. The key to my system is this anchor chart. Everything evolves around what I call my golden anchor. So I've got a very specific way of measuring the previous year, the previous month, the previous week, and the previous day. If I get confluence, if I get if all these charts line up to a specific price level and setup, then that's extremely high probability, and trades like that I will have bigger targets for. So I targeted today, I targeted 1985 to 2014 in the Dow, a $29 move. It's not bad in one day. In fact, I did it in about 90 minutes, I think.
Okay, but if you add leverage, you can earn more, right?
Can you repeat that?
Oh, if you have added leverage, you will have been earning more, right?
Yeah, well, one strategy, one of my risk management strategies is this. If I get, let me get a whiteboard up. That's easier. Hang on. Whiteboard. Here we go. Okay, let's say you know, I think this market's gonna break. Yeah, I think we're gonna, you know, we've got a nice breakout pattern, and I think this market's gonna shoot up. What I would normally do in something like gold is I would take a position in these core positions that, you know, down at the support, and I would get my stop underneath that support for position number 1. And if it works, I would move my stop to break even. So that's, for me, that's what I will call a free trade, where the risk is there's never a completely risk-free trade. On very rare occasion, I haven't had a slippage for a long time. On a very rare occasion, it can blast through there and give you a lot of a bigger loss. I've not seen that happen since 2008. There was an emergency rate reduction in 2008, and gold dropped 200 pips in a blink of an eye. Anyway, if you got this risk management strategy, allows me to have one position free, and then I will add on pullbacks. So I will re-enter on confirmation of a potential breakout. I'll re-enter, I'll get a stop underneath underneath my trade, underneath the support in position number 2. So by the time, if I do that, I've then got one free trade, and I will actually double up. I'll actually have twice the leverage if I get a breakout set up like that. But I'll have twice the leverage, but I only have half of the risk, because I'll only have a risk of a loss on the second trade, not the first. So if you've got gold moving $29, I've got a free trade on the first one, and I'll probably only I normally risk about a $5 move on gold on half of the leverage. So, you know, I do exploit the breakouts like that, but only if I do exploit leverage only if I have certain setups. Okay, so let's go back to what I was talking about before. If you want to join me, the next program is next Saturday. So if you click on this here, it's £575 for an intensive program, but that gives you 4 weeks in the trading room. The trading room operates, the live room is open 4 days a week, and the alert room is open 5 days a week. So I don't open the Zoom live trading room on the Monday, because Mondays are lower probability on most Mondays. But I do open the Zoom online room just before the US Open. I leave it open. I normally talk and show live trades for the first hour, and then I revert to the alert room that I've shown you screenshots of.
Okay. So maybe see you next time.
So say it again.
So you say you have the next is see your next video is
the next program is on the 6th, on Saturday. If you want to join the program, you can do it via a recording. You don't have to come in on the 6th for the program. And then once you've done the program on the 6th, you then get access to the alerts on Monday the 8th, and then the live trading room that next week starts on Tuesday the 9th. And this price would get you into the room for 4 weeks, and then if you want to continue after 4 weeks, it's £95 a month. Okay.
Okay. So okay, I understand.
All right. Any other questions?
No, no, any other question? No, no.
Okay.
So I will let you for tonight.
Good. Yeah, I'll send the recording out for anybody if you want to watch it again. If you've got any further questions, drop me a line.
Okay.
I do these every Tuesday, so I'll be setting up another one next Tuesday at the same time. Otherwise, yeah, let me know if you got any more questions.
Okay, I will let you know.
Thanks very much.
Yes, bye.
Have a good evening. Bye.
You too.